Oh, shoot. Reddit, I don't have their walkout music queued up.
All right. Yeah. Well, welcome everybody. And I don't have the music queued up either, but Jenny, do you want to welcome everyone?
Yeah, I was just waiting for the waiting room to die down a little bit with people entering. But yes, welcome everyone. Michaela, do you see my correct screen? Thank you. Okay. We will go ahead and get started as we wait for those last few people to trickle in with some of our housekeeping. But I'd like to welcome everyone to our drought leadership training. This is our second training on risk management. My name is Jenny Byerman. I'm an agricultural and business management economist with CSU Extension. I'm going to be your facilitator for today. A few housekeeping rules before we get started. Some have good and bad internet connections. Just remember our presentation will be recorded for later viewing if you guys get kicked off. If somebody Zoom bombs or joins the meeting to share inappropriate materials, we have everyone's email address. We will issue a new link. You can look for that in your email. We ask that everyone keep muted during their discussion times unless you're asking a question at the end of a presenter's topic. We do encourage you to ask questions throughout during the chat function. I will be monitoring that and asking the presenters as they come into the chat box. If you cause any issues, our bouncer Michaela will remove you from our meeting. If you'd like to make yourself anonymous, you can change your name on here to an ellipses. During your polls and your answers in the chat, your name will remain anonymous, but you can change it back if you'd like to at any time. If anybody's having any technology issues, you can text our coordinator, Michaela. Her number's here on the screen if you're having difficulties or troubles, and she can walk you through those issues. Just a reminder, we do have continuing education credits available with Crop Advisors and Society for Range Management. Red is going to be sending you an email regarding your CE credits, and if you have any questions, you can email her directly. Her email is on the screen. A little bit about Drought Advisors before we get started. This is a collective partnership among a few entities. This includes CSU Extension, Rocky Mountain Farmers Union, the Colorado Water Conservation Board, DARCA, the Ditch and Reservoir Company Alliance, Colorado Ag Water Alliance, the Northern Plains Climate Hub, as well as the NRCS. And this series is funded through the Colorado Department of Agriculture. Our mission for Colorado Agricultural Drought Advisors is to remove our barriers and share drought coping strategies within individual operations by working holistically as a network to ensure that our needs are met. And our vision is to build short and long-term resilience for drought among Colorado producers by working with farmers and ranchers to connect resources, identify and assess risk, and implement practices that lessen the impact of drought. So this is our second drought leadership training of a 4-part webinar series. Our first one was last Friday. If you weren't able to attend, we do have the recording available for that. Our next webinar will be on February 18th, and our final webinar will be on March 4th, and then it will be followed up by an in-person training. We have 2 locations, one happening here in Grand Junction on March 8th and 9th, and then one in Morgan County in Brush on March 15th and 16th. One quick question, if you remember from last week, we had some chat bombs that were going on. We'd like everyone to write your answer in the chat and then hit send when we count down from 3. Our question that we'd like to ask everyone today is, what is one piece of information that has resonated with you since last week's webinar? If you weren't able to join us last week for the webinar, you can put into the chat something that you are looking forward to learning on today's risk management webinar. So go ahead and queue up those answers. And then in 3, 2, 1, send. Excellent. Lots of people are saying bathtubs. Lack of precipitation is more significant during times of more average moisture. Thank you, Retta. Drought bad, water good. Thank you. Appreciate the honesty. Excellent. And lots of answer, it looks like, on precipitation trends as well. A brief overview of today's agenda. We will start with our first speaker, Jeff Tranel. We'll move to our second speaker, Corey Hicks. And our final speaker is Brent Young. We'll have some time for questions after each of our presenters, and then time for additional questions. We'll round out with some breakout groups similar to last time, and then our final polling and evaluation questions towards the end. A brief introduction to our speaker lineup for today. We have Dr. Brent Young, who's an agricultural and business management economist with CSU Extension. Brent strives to help farmers and ranchers manage risk through the development, delivery, and evaluation of non-credit educational programming. Jeff Tranel, who's also an agricultural and business management economist. He's been with CSU for more than 30 years. His professional interests focus on estate planning, business succession, financial management, income tax management, and human resource management. And then we're also joined by Corey Hicks of the Farm Service Agency. He's our county executive director and has worked for FSA since 1992. And he's a Colorado native from the San Luis Valley. Retta?
Yes.
Let me stop sharing and then I will let you talk about drought planning briefly.
All right. So like I did last time, this will be a repeat, but I'm just going to ground us in where we are relative to drought planning in terms of today's content. So I think, what screen are you seeing, Jenny?
We see, you need to swap your presenter view, please.
Okay, cool. So now I'm good, right? All right. So again, this will be review, but maybe it will make new sense to you in ways that you didn't hear last week, or maybe it will be extremely obvious. But I wanted to just ground some of the content that we're talking about today in the broader context of this webinar series. So again, if you weren't here last week, I sort of talked about some of the questions we asked you on your registration information, and just very briefly put what you all said very much aligns with what we're going to be talking about in this webinar series and are talking about. No one is here because they want to learn how to weld. So that's great. We're all here because of drought and the desire to improve management with regards to drought. So to review drought, drought bad, water good, someone put it in the chat. Drought is a challenging problem because it's a problem that we don't have direct control over, right? We can't change drought, but we can change how we respond to drought. Drought also has a lot of uncertainty associated with it, and there's risk in making decisions, proactive decisions with regards to drought. And of course, there's also risk in not making decisions or waiting to the last moment. So drought is a particular kind of problem. It's a challenging problem to respond to. So this webinar series is really about upping strategy with regards to drought. Because again, we can't change drought, but we can change how, potentially we can change how it impacts our operations. So what does that look like? In the context of this webinar series and in-person class, what that looks like is we're talking a lot about drought planning. And again, we're going to be really diving into the drought planning frameworks in the in-person class, which is here in Grand Junction, March 8th and 9th, and then in Brush, Colorado for the 15th and 16th of March, the following week. So we're going to be diving much more into that in the in-person workshops. But the brief overview to orient you to the framework and connect the material we're learning today and that we learned last week to the framework, I'm going to go over it in the simplest way I can think of, which to me is, again, these two words. There's lots of drought planning frameworks out there, and some of them use many different words, but to me, it boils down to if and then. If we expect certain conditions, then what are the strategies that we develop around those conditions? So in drought planning language, the if is often talked about in terms of this word triggers. So it's a piece of information you can observe that prompts a decision within a drought plan. Last week, we talked a lot about what kinds of forecasts, what kinds of information is available, and how you can use those to make hypothetically, or well, the goal is to make more proactive decisions with regards to drought instead of waiting to the last minute. So we talked about some tools for looking at triggers. This week, we're going to move into the then. If XYZ conditions arise, what do we do about it? And what we'll really be focusing in on today is financial and business management strategies for adapting to drought or responding to drought. The next 2 weeks, then we'll move into livestock and range and crops. So today, financial management, and that will focus in on strategies to cope with drought. Of course, any strategies you adopt are very relative to the goals, the personal goals or the operational goals that you have with your operation. So I think it's important just to state that they don't happen in isolation. Drought is inherently a situation of scarcity. And so I think it is critical in terms of drought planning to know where you're going. What is it you're trying to achieve? So that's last week's webinar. And today we're moving here to look at the management actions that can help get you to your goals in drought, specifically from an ag business management perspective. So with that, I am going to stop sharing. And again, I'm going to launch the polls with some of our learning objectives today. So we'll take a few minutes to fill these out. All right, we're kicking up in participation, so I'll leave it open for a couple more seconds. All right, 3, 2, and 1. All right, I'm going to end the poll and we'll get to see the results. So speakers, maybe this gives you a little bit of information as you go into your presentations of where we are all at in terms of our knowledge going into the webinar. So it looks like lots of opportunity to learn more about tax issues and implications with regards to drought. Lots of opportunity potentially to look at the costs and benefits, and then opportunity to learn more about FSA programs. So with that, I am going to stop sharing the poll and hand it back over to Jenny, who's going to introduce our first speaker.
Thanks, Retta. Jeff, I'm going to turn it over to you for our first talk about tax issues and implications for ag producers. Reminder, if you have any questions throughout the presentation, you can put those in the chat, or there will be an opportunity at the end for you to unmute and ask your question live.
Did that come through, Jenny?
That does. It
Okay,
looks great.
good. Okay, thank you, everyone. Appreciate it. Let's talk about the tax implications of what happens when you deal with your cows during times of drought. Let's see. Oh, shoot. There we go. Okay. So the first choice you have when you enter into drought is you retain ownership of your cows and your calves. You do things as you normally would. However, you have to buy supplemental feed. You're going to go buy hay. You're going to lease some pasture somewhere else. I know over the years since we had the bad drought of 2002 and at various years, lots of cattle went east. They grew accustomed to those different types of forages available, and those cattle stayed there. Sometimes they went back, but what was the impact of that? And there's other choices as well, but those 1 and 2 are the main ones. What happens on this is you report that extra feed, the extra leases on that pasture on your Schedule F as a expense, thereby reducing your profitability, but it also reduces your tax liability, your self-employment tax, and capital gains taxes, however that may shake out. But also, while you have retained the genetics of those cows and that herd, make sure you're aware that if those cows go to eastern Oklahoma, eastern Kansas, they go somewhere else, you've lost a bit of control that you're accustomed to. So while it's not a tax issue, it is a management issue. So the other option is, what the heck? Okay, there we go. You sell your cows and other breeding livestock. You may sell calves. And for those of you that typically sell calves in January, and now you have to sell, let's say you sold the 21 calves in January of 22, and now you start to sell some other calves again in 22. Of course, that's going to greatly increase your income. The sale of those cows and bulls, but let's just focus on cows because bulls are the same. When it comes to taxes, it's going to increase capital gains if you don't treat it in a certain way. So there's really 2 parts of the tax code that relate to, one relates to breeding livestock and the other one relates to more of the market livestock things. When it comes to the breeding animals, you're looking at Internal Revenue Code, Section 1033E. This allows the taxpayer to defer recognition of gains for up to 2 years. So you sell them in 22, you actually have until December 31st of 24 to replace those animals. And more about that later. And it's only pertains to the animals in numbers greater than you would normally sell. So if you have a herd of 100 head, you normally sell 10% as culls, which would be 10 head. And this year you sold 25. It's that 15 head that is above normal. And what they do look at on normal is generally they will look at your taxpayer and the IRS will say, what is the average number of head you sold over the preceding 3 tax years? Now, one thing about IRC Section 1033E is that a declaration of disaster is not necessary. However, you must be able to prove that it is a drought and weather-related conditions that force the sale of those livestock. So it's not complicated, but you need to be aware that in this case, disaster declaration is not necessary. Another thing is about this, I said you can defer recognition gains for up to 2 years. The IRS has the authority to extend that replacement period if the disaster area is declared eligible for federal assistance, and that goes for an extended period of time. So let's say we have drought in 2001 and it doesn't start raining. The drought is not over until 2030. The IRS can continue to extend that replacement period. So as I said, the replacement period is within 2 years. And again, it's not from you sell them on April 1st, it is December 31st, the last day of the tax year in which they're sold. Most of us are calendar year taxpayers anyway, so it makes it easy. Those replacement animals have to be for identical purpose and the same amount of dollars. So it's both. So if you sell cows, female bovine, beef cows, you need to replace those with beef cows. Now you can sell white face and buy back blacks, not a problem there. You can even sell mature cows and replace with heifers, bred heifers, as long as they calve within, the next coming year. And what happens is on those cows you sold, again, the number greater than you would normally sell, the tax basis from the cows you sell transfers to the new cows, the replacement animals. And then you may have to buy them for more, you may buy them for less. We'll get to that in a minute. I've got a couple of examples on that. If they're not replaced, you say, and the IRS does not extend that replacement period, you say, I'm not going to buy these. You can pay the capital gains this year. If you sell those cows April 1st, you can pay the capital gains on those, and then you are completely free to move forward in any way you determine. If you defer that recognition of that gain using IRC section 1033E, and you don't replace them, you decide, I got hurt for whatever reason, I'm not going to replace those animals, I'm going to start running yearlings. You have to go back and amend the tax return for the year of the sale, and you may have to then, depending on how your tax preparer calculates all of the tax liabilities and reports income and expenses in the subsequent years, you may have to also have those tax returns amended. And those tax liabilities are subject to any additional tax and interest. So let me give you an example. You sell cows April 1st of 22. You have until 12/31 of 24 to replace those. You decide, I'm not going to replace those for whatever reason. The tax preparer would amend the 22 tax return, and you're going to pay capital gains, but you're not paying that until that is amended, that tax return is amended. So there's going to be that tax and any interest on that non-payment of those taxes. Now, I talked about the transfer of basis. Let's say you sold 40 cows due to drought conditions this year for $50,000, and you normally sell 25. So the gain to be deferred is $18,750. Whether those cows are raised or purchased, doesn't matter here. If they're raised cows, there's a remaining tax basis of 0 because you weren't able to depreciate those. Then you buy back those 15 extra cows for $20,000. The first line, that 0, is the remaining tax basis on the animals you sold, but you paid $20,000, which is $1,250 more than the gain you deferred. So you would be able to depreciate that number, use section 179 on that $1,250, do whatever you needed to. So there would be some tax benefit. Now, in the green box, you'll see if those cows are purchased, they have a basis with those. Let's say the remaining tax basis is $16,000. The first column there, the one on the left in the green box, you replace them for the same amount, $1,875. The new basis is what you had before, the $16,000, and there would be no additional basis. The right-hand column, same numbers, except the replacement cost is $21,000 for those 15 cows. You have the remaining basis of $16,000, which you would continue to claim on your tax return as you would have normally. Plus you get the difference of $2,250, but which is the difference between $21,000, the replacement cost, and the gain that was deferred. So you have $2,250, which again you can depreciate in any manner you choose. That's a new depreciation number. So you choose the method of calculation, number of years. You can also use Section 179. Maybe there's bonus depreciation. You and your accountant need to have a good conversation about what you do with those numbers. And again, I've looked at just small numbers. I mean, if it's you sold 400 for 500,000, it just increases the numbers and makes them larger. So when you go to do this, you make an election to defer the gain. You're going to do these 7 things. Your accountant is going to attach a paper to the tax return. It's going to have your name, address, and ID number, be that Social Security number or your EIN. There's going to be some evidence of weather-related conditions. You're going to have a sentence in there, and then you're going to say, as documented by these pictures, as newspaper clippings, as information from Retta, or if it's over here, it may be Annie Oberlin, from FSA, NRCS, Drought Monitor. There's lots of documents that you can add to that. Then there needs to be an explanation of how that sale is related to the weather conditions. It's not extensive, rather short. Then you report number and kind of livestock sold and exchanged, number of livestock of each type that would have been sold. This is that normal, and I've got an example coming up. And then the amount of gain realized on the sale and amount of income to be postponed, covering all those things I said before. This may be exactly what you add with the lack of documentation. Here's the number of animals sold in each of the preceding years. So you get a number, 3-year average is 25 head that you would have normally sold. This is where I got that. And then some computations of how you come to those numbers, rather straightforward. I'm going to show you where you can actually cut this out, and I did at the end of the presentation. Now, without questions, Michaela or Jenny, are there questions about the breeding animals in the chat that I need to address before I move into the market animals? Okay.
We haven't received any questions yet, Jeff.
Hey, I'm either doing a terrible job or a great job.
We'll go with great.
Okay, absolutely. So let's assume you sell market animals, non-breeding. So these can be calves, they can be yearlings, they can be grass fat that are 6 years old. It doesn't matter. You can actually even put your cows, your breeding livestock into this, though most people do not. This allows you to defer if your normal practice is to sell in January the calves that you would have had in the preceding year, or maybe you ran yearlings for all of 21, you put them on, you did whatever your feeding regime is, and you sell in January to go into the feedlot. You can defer that income for 1 year, so it's treated as if it's a normal sale next year. And again, it's more animals than normally sold. So if you normally sell 100 yearlings in January, so you sold last year's yearlings this year, and now you have yearlings, be they your own or you're purchased, and you have to sell them. You have two crops of yearlings in as income. That second bunch you can delay until next year. Again, it's that what is normal business practice? And typically they look at an average number. In this case, with 451E, there must be a declaration of drought, or which means federal designation, can't be by the governor of Colorado or governor of Utah or wherever. This is a federal designation. So it's going to be the president, secretary of USDA, or other delegate, officially recognized person. In this case, a key phrase is you must be eligible to receive federal assistance. Now, remember, where you are, your county may not be directly impacted by the drought. You're fortunate, but the neighboring county is declared a disaster, weather related, for drought. Because you are next door, you are also qualified as federal designation. But again, a key component is you must be eligible to receive federal assistance. The taxpayer makes this election, and the taxpayer must be a qualified farmer and must use the cash method of accounting. So if you are using the accrual method of accounting, you cannot use IRC section 451E. In my experience, most farmers and ranchers are using the cash method. Most small businesses use the cash method of accounting.
Jeff, we have one question.
Sure.
What time frame defines a normal sales volume?
It's going to be the 3 preceding years. Is generally how they look at that.
Okay, thank you. That's all.
Now, what I would also suggest to complicate it more is if those, let's say you're in a growth pattern. You started out with 50 3 years ago, and then you went to 76, and now you're at 100. I would bring that into account on the documents that you share with the IRS, so that the average is not a good number to use. So you sell 100, you go, that's the number I would have normally sold. That is normal business practice. I sold another 99 this year that I would have sold next year. Not a problem. Just include that in the documentation. Now, the livestock do not have to be raised nor sold in the declared disaster area, but it must have impacted that. So yes, let's say you take those cattle to the forest. There's good grass up there all summer, but the home place is in a drought. Then that's okay. You just that still caused the early sale, because you did not have grass for fall feeding, and you had to buy supplemental feed, or you sold those animals early. And the sale can be, the sales can take place before it's officially declared a disaster area. So you sell them October 1, and October 15th is when the federal government declares it a disaster area. You're okay. And again, the same information when you make that election on 451E as with 1033E. Same calculation, same information needed there. Here's an example. It's kind of the same thing. Was designated as eligible for assistance by the federal government because of drought and high temperatures. The taxpayer's farm is located in Decatur County, and the drought forced the early sale of beef calves. I would add in there was no available forage. But I mean, this is someone smarter than me drafted this example. So really, before you take action, You know, you're heading into a drought or drought conditions. You're wondering what to do. Talk to your lender. Do you have an operating line? Do you have the ability to borrow the money? Do you have the cash to go buy feed, or do you need to sell cows? Whatever the case is, talk to your tax preparer. I can sit here today on the video and say, this is what I suggest you do, but you and your accountant are the ones that know more of the information. And some tax preparers want more information. Some are willing to say, you know, we don't need any of those documents. Let's just write this sentence and see where it takes us. There may be questions of us. We have a bunch of information on the ABM website, and I'm sure Jenny has shared that with you before. There's a lot of tools in this decision making. After you've sold, again, you need to go to your lender. You need to talk to your tax preparer. I say the IRS, they're a key player in this, but do not call them. Let your tax preparer go through his or her official channels to talk to the IRS. If you were to pick up the phone and call the IRS, it's a real issue. Now, I put a website on the screen there, ruraltax.org. This is a group of us that sit on the National Farm Income Tax Task Force. We have a website. This website, we keep a number of fact sheets, other educational resources for both large and small farms, what's coming out. In fact, we're in the stages of updating many of those fact sheets due to some of the changes. We also work with the IRS very closely to come out with IRS publication 225, which is the Farmer's Tax Guide. This may be quite helpful to you. We try to make it as easy as possible to read, but it is the federal government that we're dealing with here. So really, I want to thank you for listening. Hopefully this is very useful information. You know, I'm glad I'm not this camel farmer and have to use my mule to drag my bum camels to the market. So really it's rather straightforward once you make a decision. It needs to be a production decision first. Do I keep my cattle? How long can I keep my cattle? And then it becomes a financial issue or a tax issue. Finances overlay both of those. So with that, I'm going to end my presentation, and if there's questions, I can answer those or not.
Jeff, I got a couple of questions that were sent to me directly. First one, do you only need a disaster declaration to defer payments for market animals versus breeding animals?
That is correct.
Okay.
You do not need federal designation for breeding animals to defer the recognition of that gain for 2 years.
Okay. And then another question for the breeding animals, do you need to have third-party verification that it was that there were sales due to weather-related incidents, or can you submit verification yourself?
You can submit verification yourself, but remember, it needs to be whether, while being eligible for federal disaster assistance is not required for 1033E on the breeding animals, you need to have proof that it is weather that caused that sale event. You can't just say, you know what, I'm going to cull heavy this year. You can't do that and defer those gains. It has to be weather caused, but not be eligible for a disaster assistance.
Okay, excellent. Those are the only questions that I received. I'd like to take a few moments for anyone who wants to ask a question if they would like to unmute their microphone.
And Jenny, if anyone has questions after the fact, they can, or if they show up in chat, you can forward those to me. And if there's an email address, I can respond directly, or they can email me directly.
Okay, I'll put your contact information in the chat.
Okay, thank you.
Excellent. Well, it looks like we don't have any more questions. And Jeff, I know you have to hop off for your other meetings, so we really appreciate you joining us today to talk about taxes.
Okay.
Again, if anyone has questions, you can email Jeff directly. I'll put his contact information in the chat.
Thanks, Jenny. Thanks, everyone. Bye-bye.
So I would like to go ahead and introduce then our second speaker for the day. And that will be Corey Hicks, our County Executive Director with the Farm Service Agency. And Corey, I know you don't have a presentation, so I will let you go ahead and start talking about programs available through FSA.
Okay, can everybody hear me okay? Okay. Hello, everybody. I've been with the FSA for about 30 years, and we've been dealing with quite a few programs here recently with drought, obviously. And primarily the focus is going to be drought today, and we're going to talk about the ones that FSA has available through either farm bill programs or ad hoc type legislation, which is added on after the farm bills are written. And so one of the things I wanted to start with was, I'm going to share my screen real quick here. And we'll see if everybody can see this. If you'll just let me know, Jenny, if you guys can see that.
It looks like it's connecting. For some reason, it's still black on my end.
Okay.
Maybe if you could stop sharing and reshare again. I know it worked earlier.
Okay. And let's try it again here real quick. And we'll see if it does. And if it doesn't, we'll just talk about it.
It says double click to enter full screen mode on my end.
That's strange. Mine doesn't.
That's okay.
It's not looking like it's going to work, but we can drop the link in the chat, Corey.
Okay, so it's a really simple link to get to, folks. It's called farmers.gov. You just type that into any search engine, and that'll take you to a main portal page for FSA and NRCS and actually the Risk Management Agency. And so one of the first things we want to talk about with our producers are finding out about USDA programs. That's a great website to go to, as it will individually talk about all these programs that I'm going to talk about. And then we can kind of go a little more in depth in them, but it gives you guys a good idea of what's out there. One of the things on that website also that I wanted to show you was something called the Disaster Assistance Discovery Tool, where you can actually kind of type in your information, your specific county, your kind of situation. Are you having crop losses? Are you having livestock losses? Are you having pasture losses? And with that, it actually sends you, and it'll give you contact information to your county office. The people to call to, who you can contact, that would be very helpful to do that. And so that farmers.gov is a wonderful website to go to get basic information. But some of the programs we want to talk about, and the first one I want to talk about is called the Livestock Forage Program. And that is specifically a drought loss program, and it's intended for livestock producers. It's tied to non-irrigated pastures, and of course, here on the Western Slope, we have an abundance of non-irrigated pastures. Our eligibility for that program is actually tied to the U.S. Drought Monitor. And Colorado FSA establishes, well, all FSA offices establish what we call normal grazing periods. If that drought monitor hits either a D2 for 8 consecutive weeks, or a D3 even for 1 day, or a D4 for 1 day, it automatically makes us eligible for that livestock forage program. And that then allows producers who are suffering from drought to come in and apply for assistance because of the current drought conditions. We've done LFP, I think 5 times out of the last 10 years, and 12 and 13 for sure, 18 for sure, and then 20 and 21. So it's obviously been pretty bad the last few years. We have to be in a fairly severe drought category for that to take place. And one of the most important things, like when we have these kind of discussions, is if producers are suffering from any drought conditions whatsoever, they should contact their FSA office, and we can at least steer them in the right direction for whatever programs are going on, whether or not we're eligible at that time or not. But we can also keep their name for when it does become open, when we do meet the eligibility criteria for a sign up. So we're very much wanting folks to go to that website, get informed on it, but also to make sure they have farm records established with our office. Anybody who's ever dealt with FSA or NRCS for that matter, we have to establish farm records, and it's a voluntary thing by our producers. They come in and we build their farms and their land, and we track their land for them. So we have a good record of what they're operating for if and when they ever do sign up. And so one of the first things we want to tell folks is, hey, it costs nothing to get your name in our database where we can get you established with farm records. We send out a bulletin once a month about our various programs. And when we start a new sign up on a program, or we become eligible, say for LFP, it'll immediately go in that bulletin, and then our producers would know. And so establishing those basic farm records is one of the best things we can have a producer do. And then we'll also steer them in other directions if they have other questions, even unrelated to drought, our price support programs, our farm loan programs, and things of that nature, even over to NRCS for their cost share programs. So that basic farm record establishment is one of the most important things we can get our producers to do with us. So the livestock forage program we just mentioned is a drought loss program that's part of the Farm Bill. It's legislated through 2023 currently, and all the eligibility is tied to the drought monitor. Another program that we have is called ELAP for short, but it's the Emergency Livestock Assistance Program. And it's also tied, a lot of the eligibility with it is tied to the drought monitor as well, especially when it comes to livestock programs. ELAP also covers honeybees and honey losses, production losses, but honeybee losses, farm raised fish losses. But on the livestock side, and especially specifically for drought, we just had a big sign up that ended here in January that dealt with the hauling of feed this last year. This was a big change for ELAP. Congress got together and USDA got together, and they established that we needed to get more help out there due to the widespread drought conditions, especially out west. And they came up with what we call a feed transportation loss program. It's under the umbrella of ELAP, but producers who had to haul feed in because of drought conditions and had excess mileage over what they would normally haul on their normal feed purchases were getting paid basically for those transportation costs. Was a pretty big program, and a lot of our folks, and when we have these systemic droughts that go on for 3 or 4 years like we're in, people are having to reach farther and farther to buy hay or to buy feed. That's the intent of this program. We know you're having to reach farther and farther for feed. The transportation costs become severe. And so this program was there to help alleviate some of those transportation costs. Also under that ELAP umbrella is water transportation. We have a lot of producers, normal water sources have dried up on non-irrigated pastures for them. Creeks stopped running, springs stopped running, and they're having to haul water. There is a cost share program that helps reimburse producers for their water hauling losses. Once again, that signed up ended for 2021 at the end of January, just a week ago or 2 weeks ago. And so once again, with those type of programs, LFP and ELAP, we can't encourage producers enough to let us know when they're having those type of losses. We do have situations in some of our eligibility where they have to timely notify us that, hey, I'm having to haul water. We track that for them as they're hauling water, and when they're done is when they would come in and complete their application for payment. But sometimes, like today, if a producer was going to come in and say, hey, I hauled water last year, if he hadn't contacted us before, because of our deadlines that are legislated, we won't be able to help them. It's too late. So that's why timeliness is an important issue with us on some of our programs. So LFP and ELAP are somewhat what we consider disaster or very much disaster-related type programs. NAP, it stands for the Non-Insured Assistance Program. That's another program that's out there. It's kind of more of a production and loss program. It's not necessarily. Producers can come into our office and get an insurance type coverage on crops that you can't get normal crop insurance for. In Western Colorado, that can be big for hay and pasture losses. Producers they can come in by December 1st, is usually for our perennial crops, is our sales deadline, and they get coverage for the following year. And it covers losses for hay and for pasture. And for example, on our pasture losses, we use RETA quite a bit, and we use NRCS. They give us assessments every year in the fall. And if those assessments come back that we've suffered at least a 50% of a pasture loss, any of our producers who have NAP coverage on pasture can earn a payment. And that's how those payments are made on pasture. On hay or perennial crops, especially in regards to drought, it's a yield-based loss system based on that producer's individual losses based on his yields that he's established. So once again, those sales closing dates for NAP that we establish, and December 1st has been there for quite a while for the perennial crops, we would put that in our newsletters that go out once a month, and producers would be informed. So once again, getting on that email list and making sure you're getting that once a month bulletin and knowing our deadlines, we put those in those bulletins quite a bit, and it helps keep producers informed. We have another program out there called ECP, which is the Emergency Conservation Program. It's a cost share program, and we do have some criteria that it's drought specific, but a lot of times, obviously with our droughts, we tend to get into the wildfire categories. They go hand in hand. ECP is a cost share program that can help producers repair destroyed or damaged, say, fences and other conservation structures that have been destroyed because of wildfire. And so when those type of things affect a producer, when we have our massive fires that have been going on, we kind of know. We'll try to reach out to producers, but once again, we still miss folks if we don't know what they've had for losses. And if producers are just getting the habit, and trust me, it never hurts to call an office and say, hey, does this apply to me in any way? Is there anything out there? And we'll gladly tell them, but keeping us informed is the best way, because then we can then therefore keep you folks informed about the programs themselves. Jeff was talking about the disaster declarations, and I'll give you an example. 3 of the last 4 years for sure in our Western world, in the Western states, in most of the Western states in Western Colorado, we've had the secretarial designations. There's what they call a fast track designation. If we hit a D3 on the drought monitor, the US drought monitor, which is, the monitor is independent of FSA. But if we hit a D3 during the year, we automatically qualify for a secretarial designation. We call that a fast track designation. It's sent up through FSA to the governor's office, who then in turn makes a request to the Secretary of Ag. And that's how you will see it sometimes just show up that, hey, this county's been declared a disaster. And when we have these bad dry years, you can pretty much bet that those fast track designations are going to occur. So that kind of lends a little bit into what Jeff was talking about. One of the things about FSA that we like to mention is that there's 2 sides to FSA. There's our program side, which is kind of these disaster programs and price support programs that we administer. Then we also have our farm loan side. And our farm loan side does have some emergency or disaster related stuff. We usually ask producers to talk to our farm loan staff directly on those to see if they would qualify. But just keep in mind that there is some 2 sides to FSA. And Retta or Jenny, I'm not sure, has anybody mentioned the pasture rangeland forage program through the Risk Management Agency on any of your talks yet?
No, we haven't had that.
You know, we don't administer that program, but we're hearing a lot from producers who have been participating in that program. And it's definitely administered by the Risk Management Agency, which is also a USDA agency. But that insurance is sold through private insurance agents. And because of the systemic drought that we've been in, a lot of producers have been turning to that. And it's a separate insurance type program that livestock producers can get, or not necessarily livestock, but landowners, if they make a living with pasture land, can get by obtaining insurance. It's a drought loss. It's tied to precipitation. And I just wanted to throw that out there, that's we've been hearing and seeing a lot of producers taking part of that program, especially a couple of the last 3 years. I don't have much information on, but on that farmers.gov website, they do talk about it. So that's why, once again, going to that website is very important. So there's a number of programs out there. And for example, when I talk about the Farm Bill program, so that LFP, ELAP, NAP, ECP, those are all tied to the Farm Bill. They're legislated through 2023. But every now and then we get what we call ad hoc programs. These are just programs specifically legislated by Congress that are in addition to, say, the Farm Bill program. And once again, we're getting some rumors right now that we're going to be having some programs show up here in the next little while. Some of them are tied to the payments we've already made to those producers already participating in LFP. And some might be outside of that. Or once again, if producers haven't participated or they're wanting to, now's a good time to visit their FSA office to see if they need to establish farm records and basically become more informed about those type of programs. We don't know for sure what's coming on those type of things. We're just like you folks. As a matter of fact, most of the time our producers call us and tell us first. They hear it in High Plains Journal or something like that. Then it has to go through the whole legislative process before we get the chance to implement it. So a lot of times it's out way beforehand, and then we kind of know something's coming. And so there was something specifically passed just the other day for additional assistance for producers suffering from drought conditions. We don't know what form it's totally going to take, but we do know they're going to provide some more assistance to some producers. So the most important thing with what I'm talking about is just making sure that our producers are informed. That farmers.gov website is an excellent site to go to find out about FSA, NRCS, RMA programs, whether drought related or not. And as I always say, if it sparks one question and somebody calls on it, we'll be glad to answer it. See if it applies. Maybe it's a sit and wait a little bit, or yes, there's definite sign up going on. So that is really important. And I know CSU helps us out quite a bit with getting the word out about our programs, which we appreciate. And you just never know, especially with some of these ad hoc programs. We've had a ton of what they call pandemic assistance tied to the COVID. We've had a couple of huge CFAP programs. They're not necessarily drought related. They weren't at all. As a matter of fact, they were more production related, loss of market related, but they go hand in hand in some ways, just getting the information out. So really, folks, that's about all I have as far as FSA goes, unless you guys have specific questions for me.
It looks like there's one in the chat, Corey. I'm just reading through. It says, are there any preventive programs available through FSA that would assist producers with drought loss, preventive measures like water conserving irrigation systems, pond lining, etc.?
You know, when we get to that topic, you know, FSA is more of the preventive for us would be obtaining insurance, right? That's kind of like getting that insurance before the car wrecks. But as far as some of the conservation measures, that's probably something they'd want to visit with their NRCS office with. NRCS, I know over the last year got some specific funding tied to drought. They had some specific signups that might help in those type of situations, improve pasture and rangeland as far as maybe spring developments or pond developments. I'm not quite sure on their rules, but I do know they had some specific drought signups for conservation measures. So I would encourage them to visit with their NRCS office on that.
Okay. Another question someone sent directly to me. Corey, are the Farm Bill programs like Ark County and PLC included in drought disaster programs, or are those separate?
Those are separate. Those are what we would consider more price support type programs. They're tied to historical grain plantings, and we build up a base. So Ark PLC is definitely not drought related in any way. As a matter of fact, the eligibility with it is not tied to a disaster designation or drought in any way, shape, or form. It's just an annual sign up for those producers who are eligible to sign up for it.
Okay. Does anybody have any additional questions regarding FSA programs?
And Jenny, we can send links for that farmers.gov. I'll send you the link for it. It's very simple. Just a farmers.gov, type into any search engine, it'll get you there. But also, you guys would have my contact information to give out to anybody as well. But through that farmers.gov, there's a county office locator with contact information of specific numbers to call the county offices for.
Okay. Excellent. Any other last minute FSA questions? Okay. I had one additional question come through that I was asked to address for the tax management strategies regarding crops. And I wanted to give just a brief answer for it. It's about crop insurance and disaster payments and the income tax consequences. As a general rule, you are supposed to report your crop insurance payments from policies like your range insurance in the income that they are received. But if you have any disaster payments due to drought, you are allowed to defer those gains and provisions for 1 year. To do that, you have to show you are a cash-based taxpayer. The crop insurance or disaster programs that you received come from the federal government under the Ag Act of 1949 as amended, and disaster payments received under the Disaster Assistance Act of 1988. And then you are able to make a deferral election for up to 1 year on those crop insurance payments.
And Jenny, we are asked quite frequently, but all of our FSA payments are reported as income. Producers would get a 1099-G on any payments that we pay out under those disaster programs.
That's good to know, Corey. Thank you. Okay. With that, I'm not seeing any additional questions coming through. So thank you very much, Corey. I will post a link to the contact your FSA office as well, so people can locate their FSA offices in their respective areas. So with that, I'd like to introduce our final speaker for today before we go into our breakout rooms, and that's Dr. Brent Young, also a CSU Extension Ag and Business Management economist. Brent, I will hand it over to you, sir.
Thanks, Jenny. Can you see my slides?
We can.
Okay, great. Well, it's a pleasure for me to be with you. I'm really excited about the fact that this group has really taken a broad stroke approach to the issue of drought, not only obviously from the technical side, what you can do to mitigate drought, but also kind of the financial ramifications of managing drought. I really appreciate that because I think it's a complex issue and we need to look at the big picture, and your group has certainly done a nice job of doing that. Very quickly, again, I'm a regional extension specialist, agriculture business management. I'm located in Sterling, Colorado, 304 Main. If you're familiar with Sterling, our office is right across the street from the Logan County Courthouse. My major responsibility is just to help farmers and ranchers manage risk. And we know that agriculture is a risky business. We also understand that those people who are most successful in agriculture tend to be those that manage risk well. And certainly we know that drought is a risk. And so how can we better manage that? I'd ask Jenny to put in the chat the address to our ABM website. Lots of very good information there. I'm going to be referring to that information as I go through my presentation today. And so I would highly recommend that you find it and bookmark it. I think it's a spot that you're going to want to go back to multiple times, and just lots of really good information. So I'm going to be talking about partial budgeting as a method to take a financial look at maybe decisions we might be considering as a way to mitigate the effects of drought. So partial budgeting by definition is planning and decision-making framework, and it's used to compare the costs and benefits of alternatives faced by a farm and ranch business. And we try to make it very simple in that we try to focus only on the changes in income and expenses that would result from implementing a specific alternative. And so, for example, we have on our website a really good decision aid that will help a producer decide in times of drought. Should I sell cattle or should I buy hay? That's a pretty complex decision because there's some tax ramifications. There's some ramifications how it affects your operation for years. And so a partial budget probably isn't well suited to make a complex decision like that. So what we're going to look at are a couple examples today that fit partial budgeting pretty well. They're, I wouldn't say simple decisions, but they're a pretty straightforward change that doesn't have a lot of other ramifications possibly for the operation. Now, one thing I would say for producers, developing partial budgets is kind of intuitive. They do it a lot. I've seen some pretty sophisticated partial budgets on napkins across the table at a coffee shop. I've seen some on the back of an envelope. My son and I are involved in farming, and when we drive down the highway going somewhere, we're doing partial budgeting all the time. We call them air partial budgets because we're just talking through things. We're not committing that to paper. So what we really want to try to do is take a process that most farmers and ranchers, again, do all the time, they do it intuitively, and give it some format to make sure that we include all of the aspects of that decision, and also a format that does the math for them. So that just makes things a little bit more straightforward, a little easier to do. Also, it makes it much easier to do what ifs. I can change one component in a partial budget and I can see how that affects that decision. Where if I do it on the envelope, I got to have several envelopes. So again, a tool that'll help make this decision process hopefully much easier. So the first example we're going to go through is I'm a farmer. I'm maybe dry land irrigated. It could work either way. But I know that if I can maintain crop residue on the surface, that can help mitigate drought. It's going to help me to maintain soil moisture, allow me to trap more soil moisture maybe in the off year. It's going to make that soil more resilient over time because we're going to build up organic matter. And so is this a technology that I might want to adopt? So I'm going to need some resources in order to do that. So I'm referring back to that ABM website to make this assessment using a partial budget. I'm looking at two things. I'm going to look at a custom rates survey and actually a custom rates guide. We're currently collecting the data for the survey, but we publish a custom rates guide every year. And that gives you the range of prices and kind of an average price that people who do custom work in agriculture charge. And so this is a great place to go to kind of get a feel for what it costs to do a tillage operation. And that's how I'm going to use it. And then also I would click on this new decisions tools because that's going to give me access to that partial budgeting tool. So this is what the partial budget tool looks like. This is the blank template available on our website. As a user of the tool, you can put data in any box that's yellow. And as you see in that blue box, we have information about what we're asking for, what we want you to put in those areas. And then kind of a green light at the bottom. If the net change is green, that means this is positive, it's financially viable. If you see the net change at the bottom coming out in a red font, or a red box, then it's not financially viable. So a really quick and easy tool that a person can use to look at these pretty straightforward decisions. The other thing that I need, as I mentioned, is that custom rates guide. And so we are currently collecting data for the 2021 custom rates guide. So we're kind of a year behind. The reason behind that is our philosophy is we want to use real numbers. And so we collect the data based on what happened in 2021, rather than trying to project what we think will happen in 2022. So the information that I'm going to be sharing with you with the next slide is information from that 2020 custom rates guide. So this particular farmer is looking to convert to strip till and looking to do that on 232 acres. And their current tillage operations consist of running the disc across the field once, using a tillage implement known as a surface chisel twice. So that $28 reflects running that piece of equipment across the field twice, and then running a field cultivator twice. And so based on those custom rates, and that custom rate should include the fuel, the upkeep on the tractor, depreciation, and also the labor involved to run the equipment. So it's a pretty much a complete cost for that operation. So if we add those together, if we go to strip till, we can eliminate those 5 passes across that field, which currently cost us about $65.50 an acre, or over that 232 acres, $15,196. And we can substitute that for the strip till. So obviously, if we go to the strip till, there is a cost involved with that. Based on our custom rates, the typical rate is about $16 an acre. And again, the idea being that we cover all costs with those $16 an acre. So if you look at this one, this is kind of a no-brainer. We're going to actually have a net increase of $49.50 per acre, or for this particular farm, 232 acres. That's going to result in a net increase in income of $11,484. So on the surface, excuse me, on the surface, that looks really good. But the next question a producer would have to ask is, maybe I don't own the strip till equipment. I've got to purchase that. Can I purchase a used piece of equipment? Can I purchase a new piece of equipment? If so, I'm probably going to borrow money to do that. Do I have money for the down payment? Can I afford to make the annual payment? This piece of equipment is a large piece of equipment. It's quite heavy, and depending on the soil type, it can take between 25 and 30 horsepower per row unit to pull this through the field. So do I have a tractor large enough that has that horsepower? Do I have to purchase a new tractor? We are going to plant right back in that 4 to 6 inch strip that this machine will provide for us. And we have to have very precise guidance so that that planter follows as close as possible the very middle of that strip. So do I have a guidance that's accurate enough to make this equipment work? I may have to upgrade that. So the question becomes for the producer, will that $11,484 be able to take care of the value of the down payment and that make that annual payment every year? If not, then maybe we look at, can we do a used piece of equipment? Could we hire someone to strip till for us? Instead of going with a 12 row unit, can we go 8 row units? And that means we can use the existing tractor. So although it doesn't take care of all of the questions associated with this particular decision, it does provide some information for us to take the next step and determine, based on our unique situation on our farm, can we make this cash flow? Can we buy needed equipment if we need to do that for this to work? So let's take a look at another example, and this one may be one that hits a little closer to home for a number of you. Let's take a situation where we're currently in alfalfa production. Maybe we've been in a situation where on restricted water use, and so our alfalfa yields have greatly decreased, but another option for that irrigated land would be to produce dry beans. And so what would that look like? Again, there are certain resources we need to be able to use our partial budget. In this case, what we need are a couple of enterprise budgets. We need an alfalfa budget and we need a dry edible bean budgets. And both of these are located on our website. And thanks to Jenny Byerman, Jenny puts these together and updates these on an annual basis. And so this information is pretty readily available. And again, as with our custom rates guide, we try to capture average numbers. So if I take the information from both of these enterprises and plug it into this partial budget tool, what I find is I'm going to have an increase in income, and that would be the value of the sale of the dry beans. So I got the increases to income information from that dry bean budget. I'm also going to have a reduction in cost, and those reduced costs would be the cost associated with growing alfalfa hay. And this information came directly off of those budgets. On the added cost side, that reflects the cost of producing dry beans, because now I'm assuming that enterprise, so I've got to pay the cost to produce beans. The reduced income would be the income I would lose because I'm now no longer producing alfalfa hay. And so we've got to be cognizant of where the data goes. Got to think through it just a little bit. But in putting this together, this is what we came up with. And this is information directly off the budgets. No consideration of changes in water use, water availability. But if water was not an issue and we're just looking strictly at making a change between irrigated alfalfa that we currently have to dry beans, you can see that the dry beans would be favorable, but at a very small rate, only about a $4.47 per acre advantage, or a little over $1,000 on this farm that's 232 acres. So just looking at it, things being even, water not an issue, we see that that may not be the way to go for us. Now, one of the things I had mentioned was that we can vary these costs and look at some other alternatives. And I know, Jenny, we're getting close to time. Where are we on in terms of available time for this session?
We're still good on time, Brent.
Okay.
We have until about 12:30, 12:35.
Oh, great. Okay, so we're in good shape. I'm going to stop sharing this screen, and I'm going to pull up just that that partial budget. And so give me a second to do that. Okay, hopefully what you're able to see is the actual live partial budget. So what would happen if instead of being able to produce 2.5 tons of alfalfa per acre, maybe we're on restricted water use, and now we can only produce 1 ton per acre. What does that do to this whole equation? Well, as you can see, it makes a significant difference. And so if we're in a position where we just don't have the water to make an alfalfa crop, typically the water required for dry beans is considerably less than if we really plug that difference in. You can see this might be something we'd want to look at. One of the other things that I've not captured, but I could probably work it in here, is because alfalfa is a perennial crop, we have a lot of expenses up front to establish it. Typically more expenses in tillage than some of the other crops that we produce, because alfalfa is such a fine seeded crop. We typically try to put down multi-years worth of fertilizer, predominantly phosphorus, because of that perennial crop. And if you've bought alfalfa seed lately, as I have, it's not cheap. If you buy Roundup Ready alfalfa seed, you're going to pay upwards of $10, $9 to $10 a pound. And the typical seeding rate, I know at least here where I farm in northeastern Colorado, is about 20 pounds the acre. So it is an expensive crop to put in. And so if I'm, say, in the 3rd year of this alfalfa crop and I'm considering making the change to pinto beans, I'm going to lose some of that investment in that alfalfa crop. Hopefully there's some residual fertilizer that'll benefit my pinto bean crop, but that's something I've got to consider in the whole scheme of things. And obviously, if that's an older stand of alfalfa, then that's less of an issue, because I'm getting to the point where I've kind of exhausted those initial expenses to establish the crop. I'd like to stop at this point. I think we've got a little bit of time here. Certainly we can manipulate some other numbers on this live version of the partial budget if someone in the audience would like to see that. But hopefully the other thing that this shows you with this tool is its versatility and the ability to do an unlimited number of what if scenarios by, again, changing factors within this decision and see how that affects the bottom line.
Brent, while people are thinking of some numbers or possibly some potential changes, I have a couple questions that have come through.
Okay.
First one is, let me get back to it. Does a partial budget replace an enterprise budget, or how should I use the two separately or together?
Very good question. So it doesn't replace an enterprise budget. An enterprise budget is just an attempt to look at the cost for that specific enterprise. And, we can use it various ways. One would be to determine if that's an enterprise we might want to consider. Looking at the potential for revenue, the costs involved, or as a way to check what we're currently doing. If we have our current cost of production, our production figures for an enterprise, let's compare them to the budgets that Jenny puts together, which are kind of averages. How do we stack up? A partial budget is really a budget used or a tool used to look at a decision between two alternatives. And so what we've produced here, one alternative was stay with my conventional tillage practices or adopt strip till, or stay with those fields in alfalfa, or consider taking them out of alfalfa and put them into pinto beans. So that's really the differences between an enterprise budget and a partial budget.
Excellent. Another question that's come through, do the harvest costs include freight?
So again, you need to look back at that budget that I referred you to. I think there is a little bit of trucking costs. Typically, we put some trucking cost in that budget. But again, those are averages. So as you look at the budget, no one's average. And so if your freight costs are higher, certainly you would want to incorporate that into the partial budget analysis.
Excellent. And one more question, would the partial budget tool work good for analyzing buying versus raising your own replacement heifers?
Certainly you could do that, and it's going to give you some base information that can be helpful. Again, that tends to get into a little bit more complex of a decision because of some things regarding tax ramifications, as Jeff went through. And so we actually have a decision tool. It's an Excel-based decision tool that will help you, lead you through making that decision. And so kind of a rule of thumb, typically if it's a more complex decision for a partial budget, we've thought about it and we have a decision tool that'll lead you through that more complex decision. And typically those Excel-based decision tools are several spreadsheets, require quite a bit more data than a partial budget would require.
Excellent. One more question just popped in. What is potential market difference for Roundup Ready alfalfa versus non-GMO?
That's a tough question for me. I guess right now, when I look at market reports for alfalfa hay, they are not distinguished as being GMO or non-GMO. The big distinguishing factor is hay quality, and that's typically expressed by feeding quality. What's the relative feed value of that particular hay, and we typically use that. I know dairies use that pretty significantly to price hay because they're willing to pay more for high quality hay versus poor quality hay. So right now, I'm not seeing the non-GMO distinction in any of the marketing information that I receive. So if a person is interested in raising non-GMO hay, then I think the first thing you'd want to do are, what are the potential markets out there? Are there dairies? Are there cattlemen? Are there end users who are willing to pay more for non-GMO hay? And then the question is, how much more? And, does that increased value justify some increased costs you might have? So again, I'm sorry, not a very good answer, but at this point, I'm not seeing that distinction reflected in any marketing information, price information that we have available for alfalfa hay in the state.
Are there any other, he said, thanks, Brent. Are there any other questions? And also, does anybody have any potential changes that they'd like to analyze in the partial budget regarding any production decisions?
Jenny, if there's no other changes or questions people have, and if you and Brent are willing, maybe it'd be fun to take a look at the buy hay, sell cows decision tool. To put you on the spot, or you can say no too.
Sure. I have some copies somewhere. I think, Brent, do you have a copy of that one?
I don't have it. I can find it, but if you've got it, I'd have to go to the website to pull it down, Jenny. So you may have a.
I'm just pulling it up right now, Brent.
And there is, I see in the chat, the suggestion to contrast cover crop added to bean scenario.
Oh, I see that. Brent, while I get this one up, is there any suggestions you have for cover crop added to your bean scenario?
So certainly you could do that. One of the issues that we would have with that initially that I could see, based on how our budgets are put together, is unfortunately we would probably only be able to look at it from an added cost scenario. And obviously we know there are some benefits.
Brent, you got muted.
So again, all we would have is the added cost to doing that. What we don't have and what we need, and maybe some of you on this webinar have access to this, what I would really like to have is what does that do to income potential? Do we increase yields? Do we increase quality? Over time, do we reduce cost? And the problem we have with a lot of that is we just don't have information to quantify it. So one of the things that I'm really hoping for, as I'm involved with this process, not only looking at drought management, but also soil health initiatives, a lot of those going on that I'm involved with, the ability to quantify the benefits of cover crops so that we can be able to plug it into a partial budget.
Thanks, Brent. If there's no more questions regarding the pinto beans, we do have a few minutes and I can share the buy hay, sell cows tool.
Annie, I have a quick question.
Go ahead, Harrison.
Brent, I find that on our farm, our largest expenses in a drought year seem to come in amortized expenses, development of new infrastructure, whether it's piping or or development of new resources or other things like that. Is that a tool? Is that something to consider in the partial budget, or do we really need a more advanced tool for that?
Actually, that's a good question, Harrison, and it is incorporated into these numbers. So as I mentioned, what we do in any perennial crop budget is we try to capture the cost of establishing that crop, and then we'll take that cost and divide it over the useful life of the stand. So with alfalfa hay, we're going to take those costs and we'll have embedded in the operating costs an establishment charge. And so that's the way we try to capture that. Now, there's a plus and minus to that. Obviously, the cost needs to be captured. And from one standpoint, it's probably, I guess, more fair to the analysis to charge it out over time. However, having just put in several acres of alfalfa, my seed dealer won't let me pay him over 5 years. He wanted all that money up front. Surprise, surprise. And the fertilizer dealer wouldn't let me pay that fertilizer over 4 years or 5. So it's, you know, from one standpoint, it's probably a better way to account because it's probably more accurately accounting for, you know, the value of those establishment costs over time. But on the other case, I got to figure out how to pay that the first year that the hay's in. But if it's a piece of equipment and you want to capture that value of that equipment, you can. And there's a lot of ways to do it. I mean, if you really want to be very detailed about it, you've got your own figures and you can amortize that over the life of the piece of equipment and include it as a line item cost on, you know, your budget. Or the other thing you can do is use a custom rates guide, which, you know, are a custom rates price, which should take that into account. But you're exactly right. It needs to be accounted for. It is an actual cost, and there are ways to capture it.
Thanks, Harrison. Any other questions? Brent, real quickly, per Retta's request and suggestion, you should see the buy hay sell cows tool. Do you think you could just give a brief explanation about some of the differences and why this tool is a little bit more developed for this specific decision versus the partial budget?
Well, right off the bat, one of the things that we have to look at with a decision to sell a cow, consider a cow to be your factory, not your calf factory. And so we have to look at what that cow's contribution would have been over time. And so that's one of the most obvious things that comes out when we look at that particular this particular decision tool. And because we're looking at that contribution that cow makes, that factory, so to speak, over time, it makes it much more complex. So the other, as we look at a partial budget in comparison, a partial budget is usually best suited for a decision that we're going to make on an annual basis. Now, having said that, obviously taking hay out of production and putting in an annual crop like pinto beans, again, you could lose the investment you've made in that alfalfa crop. If I'm talking about buying a piece of equipment, unless the decision produces enough cash savings that I can pay for it in 1 year, then I've got to take that into consideration. But the cow thing again becomes more complex because of the long-term nature of that factory, so to speak. Jenny, if you'll click on the short-term tab. And so this is more in line with a partial budget because it's really looking at making a change in 1 year. And so the idea might be maybe what I'm going to do is sell some cows and buy them back. And I just really want to know what's going to happen in the short term. So a partial budget could do this. However, I like the tool better here because it identifies for you the specific pieces of information you need in order to make an informed decision. If you recall, that partial budget template is kind of a blank slate. You have to have some level of sophistication to know what goes in those boxes in order to do a good analysis. We've taken that that decision from you, so to speak, or we've given you some hints as to what really should go into making this decision in this specific tool. And so as you look at it, that's really why a tool like this would be superior to a partial budget. Again, because it deals with, I'm considering getting rid of part of my factory, and that's a long-term decision.
Thanks, Brent. Are there any last minute questions that we have on the partial budget or on the other decision tool? I posted the link above to all of our decision tools. So this one that we showed, the buy hay versus selling cows, and the partial budget. Plus, there's a lot of additional tools that follow this Excel-based format available on our website. Brent, if it's okay with you, may I drop your contact information into the chat like I did with Jeff's to contact you? Excellent. It doesn't look like we have any other questions coming in. So thank you very much, Brent, for demonstrating our tool for us. I'm going to hand it over to Retta for our final portion of the webinar today for our breakout rooms. And then we are, we'll be there for about 10 minutes, I believe, and then we'll reconvene and do our final polling and evaluation questions.
All right, thanks, Jenny. And yes, as Jenny mentioned, we're going to go back into breakout rooms like we did last week. Hopefully I won't mess it up as much this week. I had some timing issues last week. So we're going to go there for 10 minutes. Each of you has a facilitator in your group who's affiliated with our Drought Advisors group. So they will help guide you through the questions. I've also put the questions in that chat document there, or in that document in the chat. So you can click on them yourself. I'll also broadcast them across the screen in your chat groups. So hopefully that gives a little bit of direction about what we'll be doing, but it's simple. And the point of this is to get to know each other as well as reflect on the material we just heard, and also hypothetically give some feedback to the speakers and to us as a group about the types of information. So the things that we'll ask you to reflect on is one thing that surprised you, additional information or questions you still have regarding today's topics. How does the information from the speakers tie to what you're already doing? And how might you use this information and tools? So those are some of the things that we'll discuss in our groups, and the facilitator in your group will identify themselves. But again, there's somebody who's affiliated with our group. If lots of people get off the call and your group has no one in it, I'll be watching that and move you to another group. So just to warn you, there's a chance that you could suddenly be parachuted out of your discussion group and move to another group. So with that, I'm going to push the go button and we'll see you back here in 10 minutes. Hi, Lisa. Do you want to go into a breakout group? Welcome back.
Here they come.
All right. I think everybody
Meeting is
is
being recorded.
unwilling or not. People are being forced to come back to the main meeting room. So I'd like to hear from just a couple groups or a couple reflections from individuals on what you all talked about in your group.
Red, I'm going to start off with our group and just thank the members who were in a engaged conversation. And what we found really great was some people don't understand that there's all these amazing tools for producers, and our ability to educate people on these tools is an essential part of making educated risks for your farming or ranching operation. And so that really came out. And then I don't know if Jeff or Brent are on, or maybe Jenny can answer this. One thing that came up as well too with planning is the rising inflation costs. And if we do put that a part of both the enterprise or the partial budget, and a number, not knowing what it's going to be, but is that a good buffer to think about those inflation costs for the years to come, or immediately right now?
That was that was a question that was actually brought up in our group. How do you handle that? And one of the things that I recommended, if you use that custom rates guide, it gives you a range. We have a median price and a range. And certainly I think we need to start thinking about looking at the upper end of that range. I get the question all the time, what factor should I use? If the federal government says the consumer price index is 7.5, what is it really in agriculture? My guess is it's higher. I don't have anything to quantify that with. My own experience says it's higher. How much higher, I really don't know. We will start collecting data for the 2021 custom rates survey, or we're going to conduct the survey starting Monday. And so hopefully we'll start to get a little feel for that. However, again, that's based on what did you pay in 2021 or what did you charge in 2021, which, we may not get the full reflection of that. And so, that can be an issue. One of the things that, and Robert asked this in our group, and I didn't think of it at the time, but I believe it's the Economic Research Service of the USDA does put out a price of the price information every month, and it's nationwide figures, averages, but it does reflect month over month and year over year increases for things like fertilizer, fuel, those inputs that we use in agriculture. And so, and I can provide access, a link to that if you're interested in taking a look at it, but at least that gives you kind of a ballpark figure. And again, it's tied to those things that we purchase for agriculture. So it's going to be obviously more accurate than looking at consumer prices.
Cool. Any other thoughts on inflation, or what else did you hear in your groups? Go ahead, Jenny. I think I interrupted you.
Oh, no, I was just going to ask Greg if he had any additional questions or comments about his breakout room, but he chatted, so.
I'm happy to report out for ours. We had a bit more of a we didn't stick quite to the questions. One thing that we talked about was not so much on-farm increases in cost, but the increases of cost that often come in a system-wide setting. So the cost of management of irrigation companies, the cost of making improvements to infrastructure, system-wide infrastructure is a big deal in a drought year. And as we move forward over the next 10, 20 years, how critical that sort of cost analysis is. So didn't quite fall in line with the on-farm stuff, but probably equally important to be thinking of as you participate in your irrigation company annual meetings and things like that, is to recognize there's need for more money in those systems as well.
All right. Well, I just received a reminder on my computer that this meeting ends in 5 minutes. So I bet everybody's relieved about that. So I'm going to launch our final poll to see, if anything, if you all learned anything today. So I'm going to launch that, can start filling that out. We'll give you a little bit of time in silence, and then Jenny will close out the webinar today. All right, we're about 44% participation. Let's get it to 50. All right, we're going. All right, I'm going to close the poll. We're about 65%. So thank you, everybody. And Jenny, I'm going to hand it back over to you. I'll share these results so you all can see them as well.
Thank you, Retta. I'd just like to thank everyone for joining us for our risk management webinar today. This is the second in our series. Again, we'd really like to connect with you guys. We have a few social media handles and channels that we're on. We have Facebook, LinkedIn, Twitter, and Instagram. You can find us by searching @Drought Advisors. Our email, if you guys have any questions about today or need any additional information, you can email droughtadvisors@gmail.com, and we'll get back to you with resources and any questions you have. And then our website available is drought.extension.colostate.edu. And we will see you guys next week for our third virtual training. That one's on livestock and range drought management. It's going to be moderated by Miss Michaela Fenton for us. The week after that, our virtual training number 4 for our crops and drought management webinar that's moderated by Gus Westerman. And then we'll round out our series with our in-person and final training. You'll be joining us either in Grand Junction or in Morgan County in Brush. So thanks again, everyone, for joining us today. And we will see you all next week.
Jenny, quick plug, folks can still register for webinars and go back and watch recordings. So if you know other people that would be that you want to get on the train now, it's not too late. So registration is still open.
But it is almost too late for the in-person workshops. We're almost at capacity for those.
Oh,
So,
great, thanks, Ray.
So just so you know.
Thanks, guys.
But if you're really interested and not registered for the in-person workshop, I guess go ahead and register and we'll deal with that when it arises.
Excellent. That's all we have for today. So thanks everyone for joining.